Hey guys, it's Ed Bolian from VINwiki, and today we have a very special episode. I am here with Mitch Katz, the President and CEO of Premier Financial Services. Premier has been one of our ongoing sponsors here at VINwiki, and they're somebody I dealt with a lot while I was at the dealership, and they're one of the most respected names in the world of leasing and exotic car financing. And so today we're going to be answering some of the questions that we fielded from you guys through YouTube and Instagram and other social media posts that we made, asking what your questions were about the world of exotic car financing. Mitch, thanks so much for being here.
Well, thank you for having me again, Ed. It's always a pleasure, and I really enjoy what you're doing on your channel. We get a lot of referrals, and it's just been a really great partnership for us as well.
I really appreciate that. But we got some amazing questions and a lot about how exotic car financing and leasing can work, some requests for some examples. And so let's just dive in and start going through them. The first question that we got was, how does exotic car financing differ from traditional financing?
Well, right off the bat, there are a lot fewer choices. Most banks will not finance something that they're not familiar with. And when you start talking about Lamborghinis and Ferraris and McLarens or vintage or classic automobiles, it's outside of their wheelhouse, no pun intended. So you have to find a lender who's familiar with these particular marks in this market. There's Premier and there's several others who handle leasing and a couple who do traditional financing. Primary differences are, these often are cars that will not depreciate as rapidly as a daily driver. One of the main reasons is people don't put the type of mileage on these cars. Also because it is a smaller market, they're not producing as many cars. So you have an asset that is more favorable, in my opinion, than daily driver type cars. Also, residual value, because they don't depreciate, tends to be higher, and that throws off a lower monthly payment. So depending, where you're located, you can have a payment with tax paid on a monthly basis for considerably less.
No, for sure. I mean, that's certainly something that I saw is you've got fewer players, but all of them tend to be, at least we would hope, pretty educated about the markets, not only for what these cars are worth today, but in many cases what they're going to be worth, months or years down the road. And so that's what allows guys like yourself to make more educated guesses about what a fair residual is. And obviously the more favorable that is, the less principal you're paying down. The second question was to ask us to describe some of the different loan products that are really available for cars like this.
Well, this goes back to the first question a little bit as well. Traditional lease is a closed-end lease where you're basically going into a dealership, you're renting a car for 3 years or 4 years. You can put so many miles on it, and then you return the car and hand back the keys. Any excess mileage or wear and tear you'll be charged for, and you move on to the next vehicle. Where here, what you're looking at is an open end, which is more like a balloon note finance. We have that fixed residual. If you make it to full term, then you either buy the car or refinance the balance, or you can sell it or trade it and keep any additional monies above and beyond what is due. So that's also a primary difference. And lastly, the ability to terminate early. A traditional lease, you're often locked into the stream of payments. If you're a year into a 3-year, you're going to owe them 24 payments. And if you want to buy the car, 24 payments plus the residual value at the end. If they're willing to do that, sometimes they want fair market at the end. It's not a fixed number. With a lease, at least with the Premier lease, the simple lease, you're able to pay it off using principal balance plus a fee equal to one payment anytime you want to pay it off. So those really do, differentiate. Now, the second question was available loan products. Besides the leases that we offer, there is traditional financing, which usually is, for a 3, 4, or 5 year term. There are some lenders that are going 6 and 7, and then there's also lenders out there now that are doing 12-year financing. In some cases, 12 years might make sense. If you have X number of dollars that you can spend and the wife's not going to let you spend $1 more than that, yes, you can get more car because it's going to be amortized over 12 months. However, you will not be paying down very much principal during that period. You're paying almost all interest for most of the life of the loan until you get down to maybe the last few years, maybe the last 4 or 5 years. You're going to start really hitting the interest a little bit better. Early on, though, all interest.
Totally, yeah. So, with exotic cars, you still can get a 36, 48, 60, 72-month term, and there are banks that will do that, even some more traditional banks that aren't just boutique exotic car financing, entities. But that being said, the ones that you're probably going to see other strings attached to those types of loans, either a dollar amount cap or appraisal clauses or other things like that, because they're being faced with an asset that they don't necessarily know what it is. And I think that's where building a relationship with a lender who does have a lot of experience and access to other types of deals for these types of cars can really, really help a lot.
Absolutely. We are in this market full time every day. When someone calls us about a particular vehicle, it's highly unlikely we can't, right away give you a quote, because we know the value. We know what the car is estimated to be worth in 4 or 5 years. The other primary difference too with the financing versus leasing is the sales tax, which is all due day one on traditional financing or an outright purchase. With a lease, you're going to pay sales tax in most states on a monthly basis. So there's quite a few differences from a tax point of view as well. The ability to write off with a lease is not as limited as it is with a traditional finance.
Totally. Now, the third question was, how does an open-ended lease differ from a traditional closed-ended lease that you might get on a new car? Obviously, there's not a lot of traditional closed-ended leasing on pre-owned cars. There's a couple manufacturers that do it for CPO cars, but it's not really the design or the expectation that would ever happen on a pre-owned car. And likewise, most of your deals, it's not that you can't use it for new cars, but most of yours are on pre-owned. And so talk about the structural differences there and what that means in terms of advantages or potentially disadvantages.
Well, closed end versus open end, we addressed a little bit earlier. Again, it's more of a rental arrangement where you're not owning the car at the end. I mean, you can, but oftentimes the option will be based on fair market at that time. And getting out can be a lot more expensive and costly than it would be on one of our leases. There's a lot more flexibility. We like to say we offer the flexibility of financing with the tax benefits of leasing. You're able to write off a portion of the monthly payment in some cases, if you can show it as a business expense. You have a lower monthly payment, so you're preserving your cash and using that hopefully in other ways. It really is about use of money. In the closed-end lease also, as you said earlier, Ed, they don't often offer these on the type of vehicles that we deal in. If you were trying to get a closed-end lease on a pre-owned Ferrari or a pre-owned McLaren, it's just not going to happen. Nobody's willing to take that risk, to put a car out that's a few years old on a closed-end and then take it back. Just the everyday maintenance can be so expensive on one of these cars that it just doesn't make sense financially for lenders to do that. But I just want to interrupt for a second here. The best question of the whole list, and I did read through quite a few hundred, does anybody wear a tie anymore? I thought that was the best question of the whole list.
Very true. The headshots are getting dated, I suppose, based on the new world we live in. Of course, I guess it was pretty easy for you guys to adjust to remote working because obviously people aren't in your office asking for leasing. They're either applying online or potentially applying through one of your partner dealerships.
Well, we have 5 sales managers who are out on the road on a regular basis visiting dealerships, and they were pulled in and had been in till very recently. They were all working from home as well. But the rest of the office, you're right, people don't come to our office. We're dealing with dealers and individuals all over the country. So everything is remote in that sense. We just needed to increase our inventory on laptops and upgrade the servers a little bit. And it took us 2 or 3 weeks to iron out the bugs and get everything working. And now it's as if we've done this forever. It's just the way business is today.
For sure. Now, when you think about financing older cars, which is obviously something that you guys do, And we have the 25-year rule in the US, meaning that once cars are more than 25 years old, they can come in with no federalization, no DOT inspections, nothing like that that you'd have to do if you were to bring in a few-year-old car. People have asked, can they lease a car through you or use your financing tools on a car they're in the process of importing?
Yes, we do finance cars that are coming from overseas. It's on a very limited basis. It's typically for people that we've done business with before, we have a long-term relationship with, and we want to make sure that the people they're using for transport are companies that are reputable, that we know, that we've done business with before as well. So there are, it gets a lot tighter, the parameters as to what we will do. But yes, it is possible, and we have done it numerous times.
I suppose the same thing would be true if somebody were trying to finance a car they'd ordered, right? So if they need to finance the deposit, is sometimes that possible?
That's not possible. We have to know that there's a title issued for the vehicle. So, more often than not, we tell them, put your order in and contact us a week or 10 days before the car is going to be there. And, we can make the arrangements at that point.
Understood. Understood. No allocation flipping with a Premier lease.
No, no allocation flipping.
Now, let's walk through what, in an ideal world, an applicant would be statistically based on the things that you look at. Because I think a lot of people obviously want to understand if they are qualified to lease their dream car through Premier or any other financing agency. And so let's talk through how you evaluate an applicant, what you're looking at, and then within each of those, what numbers are important, where they need to be.
Well, we're looking at first how long somebody's on the job and what their income is. And it's important that they're able to verify that income. We, on a daily basis, get applications that say one thing, and then we ask for proof of income, and it's substantially less. So, you need to be able to verify with a recent tax return. We're looking at previous credit, both in automobiles, important. We're looking to see if they're homeowners, looking to see how long they're on the job, what type of job it is, what kind of mortgage they've had, and how the payment. So you can't strictly go by a FICO score because it doesn't always count everything in the picture. And I like to use the example that you could have two people who live on the same street and have the same type of previous borrowing history, and one is making 150,000, one's making 750,000. So they really, in an ideal world, wouldn't have the same FICO score, but they very well might because of the other parameters. So there are other things besides that. We also see deals quite often that are not 700 plus, but the people qualified, and it might be because they had a slow payment on something, with a legitimate excuse, 2 years ago, or they went into a car dealership who, sent out 20 applications to 20 lenders, and now they have excess inquiries, and that's driven the score down. There's lots of things that can happen to do that. So you have to look beyond the FICO score. Oftentimes we will ask for backup in the way of bank statements for somebody who owns their own business. We might ask to see a securities account, to try to, our goal is to try to make a deal happen. We're not looking at a scorecard as many lenders do, where you have to check off 8 boxes, and if you only check 7, it's a pass. It's a hard pass. We'll look at a deal and say, okay, well, this person has never borrowed more than $50,000 on a car, and now they're looking to borrow 150. Well, they have the income to support that. They've been on the job for a good period of time. They own a home. They pay everybody in a timely manner. But we are going to need a little more skin in the game from them. So we might come back and say, okay, we'll consider this deal, but we want to see 20% down. And then the next time around, that same person now has built a history with us, and the likelihood is they're going to want a more expensive car, and we're going to be more flexible about the down payment that would be required.
No, that makes perfect sense. And I had made a video a while ago about, really where you'd want to be based on the kind of car that you're trying to look at. And, again, I think it's important for someone to know what an ideal applicant might look like and then know where they're beyond what they need and where they might be a little bit less, so they understand the types of conversations that they're going to have after they submit an application. So for instance, I always knew when I was sending in an application that anything above a 750 credit score didn't make an awful lot of difference. Like that, anything below, it doesn't necessarily rule you out. But if you want to say what is a perfect applicant, it's probably above 750. From an income perspective, I used to say that no bank wants to finance more than you can prove you make in a year. Most want to be considerably back of that, but if you ever wanted to get $200,000 financed on a guy that made 150, you were going to have a difficult road ahead for sure. And so the more you are back of whatever it is that you can prove, and you should be able to prove it. It should show up on your tax returns, and it should show up on your bank statements. And it's not uncommon, obviously, to be asked for those types of things. The other thing, from a loan history perspective, I always found it very, very difficult to get a bank to advance or loan more than about 50% beyond the previous high car credit. So if you've had a $100,000 loan, anything over 150 is going to become a little bit of a pain point or a sticking point for a lot of the lenders. And then from loan to value, like you said, you can always make up for some of those other things by putting more money down, but very few banks get really excited about loaning more than 80% of whatever they think the value is. We've definitely seen deals from you. I've done deals and seen deals from Premier where 10% was the starting point, and I think that's great. I don't think it's realistic for a lot of people to try to enter the exotic car space planning to sign and drive. There are not a lot of deals that way. But I think if you think about it in those ways, that you've got everything else about your financial portfolio is not detracting from it. And if you meet all those criteria, you're probably going to have a very easy time. And if you're a little bit behind on one or two of those criteria, then you're going to have a discussion. And I don't think it necessarily rules you out.
Ed, we could use you. You do a really good job of explaining this. We're always looking for people that, come on board, man.
Oh, I'd love to.
A lot of the points you said are spot on. The 50% over the previous high loan on an automobile is an accurate statement that a lot of our lenders and we look at, from the same point of view. And, a lot of money down gets past a lot of negatives. So if you haven't had big credit before, if you're showing 150 on your tax return, you want to borrow 200, well, that's not going to happen. But, if you put enough money down, there's always a conversation that can be had.
Then you're not borrowing 200 anymore. Yeah.
Right. And a lot of people, may not be taking, if they own their own businesses, oftentimes they don't take big salaries. The company is paying for a lot of items for them. So we may, want to look at the business as well. And oftentimes we see, an 1120, a business return, and on the K1 there's a distribution that may not have shown up on the tax return. So you really do have to look beyond, especially with people who own their own businesses. There's ways to get these deals done, but people do need to have realistic expectations walking in, particularly on the first exotic. You can walk in with $1 million tax return, and if the highest car you ever borrowed was $50,000 and you want to buy a McLaren for $300, I'm going to want money down.
Sure.
Strictly based on that you don't have the history to show that.
Absolutely.
Now, we might see somebody in that same situation and they've never borrowed that kind of money, but they have a mortgage outstanding for $3.5 million. And they send us, an account that shows they're sitting with $2 or $3 million in assets, in securities accounts. Yeah, we start thinking about, okay, maybe we don't need as much down. You need to see the whole picture.
The next question that we got was, do you factor in the anticipated maintenance cost of a car when you're making a decision about loaning on it?
On rare occasions, if someone is coming to us looking to borrow, a pre-owned exotic, let's say, it's a 1980s or 1990s Ferrari and it's in the $100,000 range, and they're showing us a $60,000 or $70,000 or even $100,000 income, they need to be aware of what it's going to cost to have this car maintained. That you might go in and it needs brakes and you can spend $10,000 easily. It's not, unheard of to drop that kind of money when you bring the car in for service. So we will look at that. As a general rule, no, not very often.
Sure. Are there any aftermarket warranty companies that you guys work with? And if somebody wanted to add a warranty, new or used, to a car, is that something that you consider in loan to value, or does that get advanced beyond whatever you've approved without too many questions asked?
No, we do not get involved with the warranties. That's something that the dealer will sell them, or they can find it sometimes on the outside. It also something they would pay for themselves.
Okay.
Certainly, a certified pre-owned car through an authorized dealer, yeah, we might step up a little bit on the loan amount versus a pre-owned that didn't have that.
Right, because obviously many people will have gone into a F&I office at a dealership and been presented with a lot of warranty products. There honestly aren't very many aftermarket warranty companies that will ever pay a bill in the exotic car world. There are plenty that advertise, but in my experience, I have never known anyone to really do well by buying one of these, not a name of a company that you've ever heard of, warranties. Now, if you do get an extended warranty from Ferrari, McLaren, Lamborghini, Porsche, they're great. They're worth it. You know, it's a great product. But in many cases, you can get a normal bank to advance $5,000 to $10,000 more dollars on a loan for F&I products without having to go on to approve it, which is horrifying from a future or from an imminent loan to value perspective. But it is something that is built in to allow dealers to make money, and that's something you won't necessarily see with a lot of the boutique exotic car lenders.
That's correct. And we won't finance extended warranties. We don't finance advanced sales tax. We don't finance negative equity on trades.
You try not to.
It's not right, and that's not to say that it doesn't get built into the deal sometimes. We are looking at the value of the vehicle. And if somebody bought a vehicle right and they're bearing a couple of $1,000s in the trade, and it's still within the right parameters for that vehicle, so be it. But we don't knowingly get into those situations where we'll anything additional.
Now, in general, I used to see you guys in the 45 to 55% kind of range on an average car for a residual. Is that still
That's
about
correct.
where you're at?
50% is the average rule on the exotics, and then certain other high-end cars were a little bit less. If you start looking at Astons and Bentleys and Rolls, we're going to be less than that. But on Ferraris, Lamborghinis, McLarens, for the most part, they're in that range, 45, 50, 55 on some models. I sent you a quote. I don't have it in front of me because I'm not sitting at my desk. And I thought this was right. I thought it was a particularly good example of what a lease might look like on a car in the $100,000 range. And I also thought it was a good example of a good car that leases well.
Totally. Yeah, it was a 2011 R8 V10 Spider with a purchase price of $104,900, a down payment of $10,000, amount fundamentally financed to be $94,900, and so your purchase option on that car was $45,000, so a little less than 50%, but certainly the car, we could look at a 2009 80,000 mile R8 and it would still be worth more than that. And so you're at $15,000 total out of pocket after you pay your first month's payment. And, the local taxes, it was based on a Florida lease, which is pretty typical, 7% for most of the country. And so kind of shows a really good breakdown, and we can show that on the screen here.
And this was a 20,000 mile car that a dealer actually called us about for a quote for a client of theirs. And, so here you also have a car that's bulletproof. It's 2011. It's not that old. It doesn't have a lot of miles on it, but it's been driven. It resales really well. And so it throws off a nice low payment. You don't need a lot of money coming in to do this. So all around, I would call this a really good example of a leased vehicle.
For sure. And you came up with a payment of $1,189. And,
right.
One thing, when people are trying to approximate or guess what the payment on their car might be, if you go into a dealership, they're going to estimate between $15 and $20 or 1.5% to 2% of the amount financed. So for every $1,000, $15 to $20. And that's, if you're looking at a 48 to 72 month term, that range can be generally a good rule of thumb, so to speak. But anytime you're able to, without a massive down payment, wind up with about 1% or $10 per thousand that you're paying per month, that's a really, really good deal. That usually is also the goal when you're going in to lease a brand new car, that if you're trying to lease a $45,000 BMW and you end up under $450 a month, you did pretty well. And so I think that that is a great example, because, and you can imagine if you put a little bit more money down, or if you maybe negotiate the residual up to 55,000 bucks, that's all coming out of your monthly payment. And so when you're only talking about 60 payments, every $5,000 to $10,000 of principal that you're not having to pay down is really, really important.
Right, and if you wanted to lower the payment, you also could put more money down, as you had suggested, and that's about $20 a thousand on a lease structured this way. So if you put an extra $10,000 down, you're going to knock a couple hundred off your payment, and now you're under $1,000.
For sure. You guys don't stipulate gap insurance, do you?
We don't stipulate, except in certain states that require it.
Okay. Yeah.
In which case we supply that.
I gotcha. I had a guy here talk about, he'd done a tremendous amount of research on new car leasing, particularly for Audi and BMW. And he made an interesting comment that, quite honestly, from the exotic car side, I had never considered. But he said that the way that mandatory gap insurance works, it disincentivizes putting money down on a lease, because the gap only covers the remaining lease payments. And so essentially whatever equity you built up never gets realized from gap. And so his advice was always don't put any money down on a lease.
We've heard that before. It applies more on a daily driver basis. The gap covers the difference between what the insurance company is paying for the vehicle and the total loss and what the payoff is on the loan. So, it's not necessarily just the balance of the payments. It could be, I can tell you that in all the years that I've been doing this, which is a lot of years, it's less than one handful that we put in gap claims. Primarily the vehicles we're dealing in are not daily drivers, so you don't see very often. And then we also offer the option of substitution of collateral. So if you have a loan and let's say you owe us $200,000 on it, and the insurance company comes along and says, well, this car is only worth $170. The option is to take that $170 and go find a car for the $170 and keep it in the same loan. As long as the vehicle is of equal or greater value than what it's replacing, we're okay with that. So you might opt to take another $200,000 loan car that you found that's an upgrade from what you had that was totaled or stolen, and put the difference in and continue the same lease. So between, that's usually covers most situations to help people avoid writing that big check.
Yeah, and as a dealer, I don't know that I did any of those deals, but as a consumer, it is really, really valuable for several reasons, not the least of which is keeping a loan product open for a long time. Freddie Tavares just did his first car loan ever. He has demonized the whole idea for forever, but he bought a Mercedes S65 at the end of last year that he just didn't have the cash at the time, and he paid it all off on his first payment. And I told him, I said, don't do that, not because, it's evil to go out and pay interest, but because you don't want someone who is considering loaning you money to see that somebody went through all the hassle of doing so and they didn't make any interest because you just paid the thing off. And so when you have a well-paid high-dollar car loan that shows up on your credit, it is a great thing for a lender to see. I mean, if somebody pays one of your loans all the way to 60-month term, then you know that this is not only a great client, but it's a way that you can anticipate their behavior rather than knowing, I just got to pay it off.
That's all very true. But let me throw out the flip side to that. We do not report to the credit bureaus, and that appeals to many of our clients, because it's not tying up your credit, your available credit at other sources. So if a $200,000 car loan out with us and it showed up on credit and you went to buy another car, they might look at that and say, well, you've already got 200,000 out in vehicles. Do we really want to go and extend you any further than that? So there's two sides to that story.
Oh, for sure. For sure.
Yeah.
Well, it certainly builds up their credit for returning to you for their next.
Absolutely. And we're always happy to give somebody a letter, confirming their history with us. If they need that in order to obtain a loan somewhere else, we can verify.
Now, of course, you do report to credit bureaus in the event of non-payment.
Correct.
Yes. So it goes, there's multiple kinds of reporting, but what Mitch means is that your loans will not show up if somebody else pulls your loans to Premier won't show up if somebody else pulls your credit.
That's correct.
The next question was, what advice would you give to a college student looking to own or finance a supercar?
I would say save your pennies, first of all. Be realistic about your goals for what your first acquisition is. And I think it's not realistic to think you can step from, never having had a car loan into a supercar. But you can go into something like a pre-owned Porsche, which is an incredibly great car. And you can find them for not a lot of money, whether it's a Boxster, which is, to me, one of the best deals out there. Then they're great running and driving cars. And you can buy 911s for not a lot of money. And it's really a great stepping stone for somebody to get started in. It's not, they don't always fit Porsches into the exotic family, but they are.
For sure.
They're terrific cars that won't cost you the same kind of money to maintain. Be able to establish some credit and get your feet wet in what it's like to own a car like that.
No, that's totally correct. And anytime you're looking to build up credit, then loans through Porsche are a great place to start. They've got a great financial services arm for their new products, and it is not that hard to go in and get a $100,000 loan from Porsche Financial Services. And even if you're only going to keep it for 12 or 18 months, when the next bank looks at that, they will look at it a lot more favorably, knowing that you had a big payment.
That's correct.
And so if you can't get a loan for $110,000 Gallardo or R8, you probably can get a loan for $110,000, base 911. If you can.
That's possible. Yeah.
And so that's not to sell against Mitch, but that's a great way for someone to prove that they would be a great customer for someone like Premier Financial Services.
And another way to go about it too for a younger person without having established credit is if they have a relative who's willing to co-sign.
Yes.
If they're one of the parents or somebody a close relative, there needs to be a relationship there. It can't just be a friend.
Yep.
Those are sometimes deals that we do consider as well.
Oh, for sure. But I think when a college student or a young person is thinking about owning their dream car, I've done videos on that as well. And, it's one of these things like, don't own cars that are depreciating, even if they're lesser cars than what your dream car is. Don't spend a lot of money modifying cars that you obviously won't receive as additional value when you go to sell it. And build up your credit through every means that you can. It means put some money on a credit card and pay it off, but let that balance increase whenever you can. Call Visa, MasterCard, American Express, ask for a higher credit limit so that your utilization rates go down and your credit score goes up. There's a lot of things that you can do to become a better candidate for that dream car loan, as well as learning stuff like this about what it really takes to finance those cars so that when you go into those conversations, you're not doing it nervous and blind, not knowing what anybody's going to be able to ask you or tell you or anything like that.
Yeah, absolutely. There's many things you can do, and you've laid them all out there, Ed. And it makes sense to start slow and build your way up, and to get the credit card and buy everything you can on the credit card, and then pay it off at the end of the month. Don't run up balances, because we do look at that. If somebody applies and all of their credit cards are up to the limit, you they're going to look to us like they're overextended. But if we see somebody who has the higher limits and has very low or zero balances, that makes a big difference as well. So good
Totally.
advice.
How can someone write off an exotic car payment?
Well, I always have to give the disclaimer that tax accountants, and you should check with your accountant. But it's our understanding that if you're able to use your company to pay for a vehicle, and you use it for entertaining on occasion, or take clients out, or for display purposes, you may be able to take a percentage of the monthly payment as a business expense. You're also using pre-tax dollars to do that. You're not taking money that you've drawn out of your business and paid tax on, and then using that. You're using money before you take it. So rather than you taking the income, you're paying for the vehicle. And then if you're able to take, some accountants might tell you you can take 50%, they might tell you 70%, 30%. It all depends on your particular situation, how much you can take as a business expense.
To do is made much easier when that loan agreement is structured as a lease. And that's one of the primary benefits of Premier relative to other boutique exotic car manufacturers, relative to other boutique exotic car lenders who are going to structure it as a normal loan, principal and interest.
Correct.
You're talking about depreciation and interest, or principal pay down and interest. That is something that can be totally defined as an expense. There's no anticipation there of accumulated equity. However, because it is an open-ended lease and you have all of the equity that results in your payments over time, you kind of get to have your cake and eat it too. If you end up owing $45,000 in 5 years on a 2011 R8 Spider, that's obviously going to be worth 65, 70 grand.
Right, and then you benefit from that equity, and you can either roll that into something new, or you can, take that out and start over, and next time around you may not need to put a down payment to the same extent. So there's lots of advantages from a tax point of view. And then there's also the sales tax, which we mentioned earlier, which is most states is monthly. So on that car in Florida, if you're buying that car, you're going to write a check for $7,000 plus. Here you're going to spend 7% on the $10,000 down in the first payments, and then you pay it each month. So if you keep the car a year, you've only paid tax for the period of time that you've had it.
Totally.
Not for the whole vehicle up front.
Absolutely. The next question I think is interesting. How do manufacturers offer such low interest rates and low payments on leases?
Sure. Well, we're involved in some deals like that as well, where we are for some smaller manufacturers. They're captive. Right now, Lotus and Karma are both using us in that capacity. And they are subsidizing the loans. So if you go into a BMW dealer or a Lotus dealer or Mercedes dealer, and they're offering you 1.9% or 0.9% interest rate, and a residual that seems crazy high, the manufacturer is putting so many dollars into every deal. They might, on a $100,000 car, they might be putting $7,000, $8,000, $9,000 into that they're giving back to the finance arm to reduce the amount of the interest rates. They also might be guaranteeing the residual values and enhancing that, putting money towards that as well. So you might see a car that normally we would think is worth, after, in 3 or 4 years, is worth 50, is on the market with a lease at 65,000, because the manufacturer is guaranteeing that and putting money towards that. So those are the best deals. If you want a new vehicle, find something that the manufacturer is captive, is subsidizing and offering that kind of money.
Yeah, so if you think about it, as a manufacturer has the problem that their cars need to be sold, especially as they age in inventory, or they're about to be replaced, or they got a new model year coming out. And so if they have a $100,000 car that they want to be able to increase the likelihood that it sells, well, they could just give $10,000 and discount the car to sell it however somebody wants to finance it. Or they could make it very appealing, the good advertisements of 0% or 0.9% interest, or they can apply that at the end of the term. Just set it aside so that, since they're saying that everybody else on earth thinks the car is going to be worth 50 in 5 years, but we're going to say it's worth 60 in order to give you a lower payment, and then we'll deal with what we lose at that point in the future. And there's a lot of different manufacturers that do things exactly like that.
That's right. And it makes sense, rather than giving cash rebates, you're devaluing your car. You're taking your $100,000 list price car and turning it into a $90,000 list price car,
Right.
as opposed to giving somebody, 0.9 or 0%. And on the residual end of it, they're taking a risk at a higher residual than they normally might think. But there is also the possibility that the car does bring that value at the end. There is a certain risk built in. So it makes a lot of sense, to look for that type of deal if you want something new.
No, totally. And I think as a manufacturer, when you think about it, as a consumer, you just want all the money up front. But what happens when all of it comes to you up front is that the entire market for those cars adjusts immediately. And this was always an issue primarily for the British brands, Rolls, Bentley, Aston, McLaren. They would come out with these monster rebates and everybody would learn about them very quickly. And then that's just what all the used cars had to be adjusted downward by because of what you could actually buy a new one for. And so that's what you want to avoid if you can as a manufacturer and as a consumer, to at least go into that eyes open and say, well, my car is worth less because I just got such a great deal on it. Everybody else can too.
Right. It isn't the great deal that you think it is. And this is a discussion we've had numerous times with manufacturers over the years in trying to put together programs with them or in handling their programs, that you really are devaluing your car. You're immediately making it worth X number of dollars less. Offering inexpensive financing is a much better option.
For sure.
That everybody benefits from.
Exactly. Are you guys doing any mileage limits now?
Our lease has mileage limits built into it. However, it also has a waiver that when you buy the car at the end or you pay it off early, any excess mileage is waived. And the reason we have to have it in there is in the event of a default, if we do have to take a car back from somebody, we need to establish that the value was based on X number of miles per year. So most of our leases on exotics show 3,500 miles a year. On a daily driver, depending what it is, it might be 7,500, it might be 10. Again, depends what vehicle we're looking at. And somebody can always come to us and say, hey, I really do plan on driving this 10,000 miles a year. And we'll make an adjustment. If the residual is normally 100,000, we might drop it down to 90,000 or 87,000 based on, so many additional miles at $1.50 a mile or whatever that number we think is correct for that vehicle.
We had the question asked, how does Premier's program compare to the 10 and 12-year loans that Woodside Credit is known to offer?
Right. With the Woodside's program is a traditional finance. So you're paying sales tax up front. So right off the bat on a $200,000 car, depending where you're located, you could be looking at $14,000, $16,000, $18,000 that you're going to pay. And then also depending where you're located, you may or may not ever get credit for. In California, they don't give tax credit on trade-ins. Some, a majority of states do, but some don't. And on that same $200,000 lease, if you put 10% down, you'd be paying tax on $20,000 and then tax on the two payments. So that's the first major difference. The payments aren't going to be a whole lot different. They might be a little bit lower on the 12-year finance, but not significantly because they're amortizing down to zero, and we're amortizing over 5 years down to 50%. Then last, the sale is the tax benefits. One's a finance, and you're going to be very limited as to how much you can take, versus a lease where you have the ability to take a portion of it as a business expense, and it doesn't wind up on your balance sheet in your business. So those are the primary differences.
Nope, I think that's all very, very accurate. Certainly, you can end up with a very, very low payment. You're not going to accumulate anytime you're not making a high payment. You're not going to be accumulating equity very quickly. The other benefit that I have found is that as you're building a relationship with a bank, it's very important to understand the future opportunities that you're looking for as an exotic car owner, and to know where that bank's comfort level runs out. And Woodside's cap is between $500,000 and $600,000. And so if you dream of owning a McLaren Senna or a McLaren F1, you're going to have to go elsewhere. And I think that Premier is one of just one or two banks that would ever consider a seven-figure car loan.
We do seven-figure car loans on a regular basis. Barely a month goes by where there isn't more than one, and that can be, a Speedtail, or it could be a Bugatti. It's very common for us to do that. And we also do vintage cars that range, we've done vehicles that were in excess of 10 million sale price, where we didn't lend them 10 million, but we had substantial loans. So we're not limited from that aspect. We're looking at value, and we're looking at the end user and their ability to make payments.
Cool.
And then the amortization angle, which we discussed earlier as well, with the 12-year, you refer to it as not building equity, and that's really the same thing. You're just not paying it down on the Premier loan after years. If you stay in it that long, you will be in a equity position 99% of the time. We're putting what we think is a fair market wholesale value at the end of the term. 5 years into a 12-year, you're going to be not sitting in a very good position. You've paid interest pretty much the whole 5 years.
The other benefit is that Premier services all of your loans, and that would be the case for only 30 to 90 days at most. For a Woodside loan, you will be receiving a letter to say that your payment is now due to this other bank. And that's just, it's not that big of a deal unless you end up with a bank that doesn't allow auto pay or doesn't. I've had a few that were real headaches.
Right. So, so if I may address and toot our own horn a little bit, customer service, client services, we have a staff of 30 some odd people. You'll never get a voicemail when you call in. There's always a live voice answering, even us being separated all over the place remotely. And somebody's always there to field your question, get back to you the same day, regardless whether they have an answer or not. It could be about a parking ticket you received. It could be a registration insurance issue, a payment issue. Your invoice didn't arrive on time. Whatever the case may be, somebody's there to take your phone call and answer your questions in a polite manner, and make sure that you've gotten what you need. And you don't know what the case is going to be when somebody is reassigning loans and then not servicing them.
Oh, totally. The next question I thought was interesting. How can someone with no history of financing cars, someone who's always paid cash but has accumulated some cars — this guy said he has 5 cars, it sounds like the most expensive one is a Lotus Exige, which is a $40,000 to $80,000 car, depending on which one it is. But he says he'd love to own a 720S, a new McLaren. And so he says, what banks would be willing to work with him, and how does he overcome his lack of financial experience? His question was, would $100,000 down on a $250,000 car alleviate some concerns? There's a lot to unpack there, but
$100,000 down alleviates a lot of concerns. An equity position like that, depending on what the income is as well, certainly, gets the conversation started. And there's a good likelihood that is a deal. And if there is some payment history and it's a homeowner, and they can establish if income is $75,000 and they're putting $100 down on a $250 car, it's going to be tough. But if there's income to substantiate that type of loan, the $100,000 will get around no previous car credit. We'll certainly entertain that.
There you go. And the other thing is, if you do have 5 paid-for cars with titles in your safe, there are times in which you can lien those as additional effective down payment. Isn't that correct?
We've done that. We tend not to do that on cars in that value range. We'll do that more on the high end when someone's looking to borrow $700, $800 or more, and they own a car that's worth $200 and they don't want to put any more additional cash. We might get $200 down from them and take the car and put a lien on that. It doesn't happen as frequently,
Sure.
but it is something we can do.
All right. Next question. Well, we had tons of questions about what was the most expensive car that you ever financed?
The most expensive car was a short wheelbase California Ferrari. Yeah, it was in excess of 10 million.
Fantastic. What was the oldest car you ever financed?
Oh my gosh, it's probably like a 1917 Packard or something. I don't recall off the top of my head, but we'll get some of the real old historic cars on occasion. And again, it may not be a market we know as well as contemporary vintage exotics, but there's always somebody we know who knows that market. So we have to do a little more homework in those cases, and we will require an inspection of the vehicle, somebody to actually put eyes on it and make sure it's what it's supposed to be, that there's no surprises. But, we'll certainly entertain those.
The other question that kind of came in with those is, do you finance project cars?
Typically not. We don't project cars. We don't do heavily modified cars. We see, we'll see a Lamborghini and they put a 1,000 horsepower engine in it, and, or the Jeeps with $100,000 worth of add-ons. We just find that, they're a lot of fun, but they're not often going to bring back what you've spent for these cars. There's much greater risk in those type of vehicles.
Totally. Now, that being said, we did have a great conversation about what a financing arrangement might look like on the Flood Bugatti. So a car that obviously would have immediately undergone considerable reconditioning to be made. And I think the same would be true for something like a barn find. And one thing that I've enjoyed in our conversations is I can't ask you about too weird of a deal that you hang up on me. And I appreciate that. I don't in the relationship we've had, but I've loved the conversation that we literally had a conversation about if nothing worked and we had to turn the car into decorative furniture, what could we get out of it? And what does that mean the residual could be?
All right. And as a lender in this business, that's how I need to think. I need to know, if I have to take this car back, what am I going to get for it? And if that means parting it out, or, which is not something that I'm looking to do, I'm looking to make, a series of phone calls, and within a day or two, I'm getting X number of dollars. So the more strange the story is, the more strange the car is, the more unusual, that means the more difficult it becomes for me to liquidate.
There you go.
And then, so the risk becomes greater, and we start, getting a little tighter on the credit criteria on deals like that. But no, you can call me about any car. I'm happy to talk to you about it. I won't hang up on you. I may tell you, no, I'm not doing that.
You have told me that.
Right. And I wouldn't suggest you do it either. I've said that to you as well.
Many, many times.
And that is something we say often, to customers. If we think that they're looking at a vehicle that's not right, whatever, for whatever reason, we'll say that, and oftentimes we'll get lead calls, somebody looking for something beneath our threshold, which we really aren't financing anything under 50,000. But if somebody calls us and it's, a $45,000 car, we're happy to speak to them, because chances are this is a beginning place for them. And somewhere down the road, they're going to, look at something more expensive and gradually get into a higher end vehicle. So we're happy to talk cars with people and, and give whatever advice we can.
Here's a good one. How do I convince my wife?
I don't know that I'm qualified to answer that question.
Well, I think, once you've made it much more financially viable to own this car through leasing, certainly that helps. But, for me, what's always helped is to help her to understand what the true financial exposure is of the entire equation. And if you're not talking about an asset that's going to depreciate terribly, and you're not talking about something that has this looming maintenance liability that's insurmountable if something goes pear-shaped, it ends up being a lot easier than you'd think to convince the wife that it's not the worst decision for you.
If it's a bad decision, it's a bad decision, regardless, of what the wife has to say. And you have to get to that place first. If it's something that you feel comfortable with, that you truly can afford, then I think you have a reasonable opportunity to convince your wife. Of course, we face this all the time. We've had people call us 2 or 3 days after they've taken out a lease and say, I need to return the car to the dealer, or my wife is going to divorce me, because they didn't discuss it first. I'm from the school, have the discussion up front, no surprise. And then you can enjoy your acquisition and have fun. So, convincing the wife is always going to be a challenge in this field.
That's it. Do you guys do any salvage or branded title cars?
We do not.
Okay. Not even older ones?
No. The market is really so much smaller for resale in a branded car. You're taking out a large percentage of buyers. And so it's not something we want to get involved in, nor do our underwriting banks.
Whenever you guys are hiring, where do you list things? There's a lot of people that ask questions about how they could get a job in automotive financing or how they could get a job with PFS.
Well, of the 5 sales managers we have now in different parts of the country, 4 of them worked in dealerships for long periods of time, selling exotics, really getting to know the market, getting to know the dealership business and how that works and how to deal with clients. So that's always a great place to start. You may not be able to get a job in the local Aston Martin store or McLaren store, but get your feet wet, get some experience, selling Hondas, do something, get involved in the industry and then work your way up. I really don't think there's many other ways to get involved. If you have an interest in finance, that is another angle. You can speak to lenders who specialize in automotive finance. Our staff outside of the sales managers often come to us with little to no experience, which we kind of prefer. It's easier to train somebody in the way we want things done than to try to get around what they may have been taught previously. So I think automotive lenders is a good place to start, but starting at a dealership really is a good way to go.
Well, and it's the easiest way to learn how financing is going to work because you're seeing it from really an intermediary position. You got the customer, you got the bank, and as the dealer, it's really your job to figure out how to help the customer understand exactly what the bank's expectations are likely to be and what they are, and then how the deal needs to be packaged so that the lender is going to be comfortable with it. And so there is a really, really important role that dealers can play. And there's a lot of times where people get afraid of the nature of what is called indirect lending, meaning that the dealer is applying for credit on your behalf. But again, in a lot of cases, they're going to help you to present the best scenario in terms of your participation and what the car is to the bank so that they're not going to end up asking you a million questions. There's nothing wrong with contacting a bank directly, and Mitch has everything set up so that you can do that online. But at the same time, there's nothing wrong at all with going through a dealership, and that can certainly help.
No, and the dealers often know the appetite of various lenders. They, will look at a deal and help you determine what might be the best fit. Here, this company, if you haven't had a car like this previously, it's a hard no. This company, well, they'll look at it, but they're going to require you to put up some more capital in the beginning, and the dealer can direct you in many cases to where you can get approved, get the deal done.
Perfect. Let's see. What's the cheapest car you'll lease?
Least expensive. I don't like the word cheap. Least expensive is $50,000.
Okay.
Finance amount, yes.
Amount financed. Understood. Are there situations where it doesn't make sense for someone to lease a car?
Yes. Yeah. If you're sitting with a large stockpile of cash and it's not invested and it's sitting in a bank and you're earning half a point, if you're lucky these days, why go pay, on an exotic car, go pay 5.5%, 6% interest when you're only earning and you don't have the ability to write it off? And it doesn't make sense. You're better off just writing the check in that case.
But similarly, right now, if you do have the cash, it should be somewhere where it's earning money. The markets are performing beautifully, and it isn't all that hard to beat 5, 6, 7% that
That's
you
right.
might be paying worst case scenario in interest. And so, that's always the way that I think people should rationalize financing, is as an alternative to cash. I mean, I've certainly bought a lot of cars by financing them that I couldn't dream of paying cash for. But at the same time, it's a great way to deploy cash in other ways when you're particularly not concerned about the residual value or the depreciation.
Yeah, that's correct. It's about use of money. That's the conversation I have with people on a regular basis. If your money in your business is earning money for you at a greater rate than what it will cost you to enter into a lease agreement, then it makes sense not to use your own money, but to use that to continue to grow your business. Or if you have money in the market and you're earning, 7, 8, 9%, which, as you said, is very doable these days, then why tie up your own capital in a depreciating asset? You're much better off, making a payment monthly and keeping that money working for you and earning interest, earning a return.
The next question was, will you help someone actually find the car to buy?
We don't get involved in the buying and selling aspect. And we made that decision early on when I started the company that, we're not in that business. We're in the business of financing. And since a majority of our business comes through the dealer network, we really don't want to be positioned as competing with them. So if you were to call our office and tell us you're looking for a particular vehicle, and someone in our office started to reach out to dealers, one or more of those dealers will not be happy with us because we, talked to you about a car you had, but found them a better deal somewhere else. We just find it's best, we're a finance company and that's what we stick to. That being said, yes, we have relationships with dealers, we all over the country. If you call up and you're looking for such and such, I might ask you where you live and say, well, give so-and-so a call. We'll refer somebody that way, but we don't get involved in the actual nitty-gritty of picking out cars and negotiating prices.
The last question we got is, how long does it take and what exactly are the steps that someone might go through in order to initiate a lease with Premier?
So we can actually, and have done this numerous times, do same-day deals. If we were to get a credit application from somebody, early enough in the day, and let's back up a step. Typically, someone wants to know what the payment is going to be. So they might contact us or through a dealer, they've received a quote, and they like the quote, and they submit a credit application to us. And that can be online for our website. It can be emailed. It can be faxed. We get this credit application. Takes typically a couple of hours to go through the full process. We issue an approval. The dealer then will send us a buyer's order, giving us all the detail on the vehicle, and we send leases out via DocuSign electronically. So on your desktop or on your telephone or your iPad, you can actually see the contracts, sign them, hit finished, and we have signed contracts back to us. At that point, while the leases are out, we're sending out a request to the dealer, telling him what we need in the way of documentation from them, and they can email that to us. We're also reaching out to the client's insurance agent, telling them what needs to be listed on the policy, which we need to see a certificate prior to funding. As soon as all that comes back to us, so we now have contracts, we have the documentation required from the dealer and a certificate of insurance, we're ready to fund. Most of the time, it doesn't happen same day. Most of the time, everything gets in-house, it gets funded the next day, a wire gets sent to the selling dealer. So it's pretty quick that it can happen. More often than not, it's, we may request additional documents from the applicant. We may look at the app and say we need to see a tax return, or the dealer isn't ready to give paperwork that quickly. It's not unheard of it for us to call a dealer and say, we're waiting to fund you. We need this, this, and this, which we requested 2 or 3 days ago. And so we can move as quickly as the rest of the parties are willing to go.
Sure.
It won't get held up on our part.
And in terms of the steps, like you mentioned, in most cases, this is going to work where a customer would approach Premier either through a dealer or through their website and request a quote. And that simply requires the purchase price of the car. If you have a down payment that you're asking for, how many miles on it so that they can set the residual and things like that. And then a very little bit about yourself. If you like that quote, then you're going to submit a full credit application. They're going to consider that. And then you'd start through the funding process. And after that's handled, you, along with potentially the dealer, you're going to handle registration. The dealer or the seller, you're not going to get messed up in the world of car shipping, I would hope, because it's
No, we don't get involved in shipping, registration. If it's being delivered in the same state as the customer lives, then the dealer typically does it. Otherwise, they send us all the title work and we handle it. On some occasions, we might have the end user themselves go into the local DMV with all the paperwork that we've supplied them, to get that done. When we send out a quote, we send along with the credit application. We also send an amortization schedule, which is not for tax purposes. However, it's, so you can get an idea of what you're going to owe at different points along the lease. We're the only company in the country that gives an amortization schedule with every lease contract. And it's all spelled out in black and white. So you see that with the application, what it's going to look like, and then it will be included in the actual lease based on the final numbers.
Well, I think that pretty much answers it. So if somebody wants to approach Premier about either a pre-qualification or getting a quote or just getting to know exactly how the process is going to work, what's the best way for them to contact you and your team?
Well, they can reach out to us through our website, premierfinancialservices.com, or they can call our toll-free number at 877-973-7700. And we will, somebody will be happy to discuss with you what you're looking for and put you in contact with the correct regional sales manager.
That sounds great. Well, Mitch, I cannot thank you enough for your continued support of VINwiki and all of the great information that you've been able to offer today. You're definitely overdue to come back and tell some stories when the world gets a little bit safer.
I would love to. I'd love to come back. I'd love to come back down on that.
Well, thank you so much. Thanks for taking the time, and thank you all for watching. Have a great day.
Thank you, Ed. It's great to be here again.